The rand trading above 7 rand still this morning. We had the euro below 135 against the dollar yesterday, worst level in 7 weeks, and it really seems that it's Ireland's problems that are plaguing the market at this stage.
Morning, Stephen. Yes, absolutely. Those debt concerns in Ireland have resurfaced, and at this point looks like it could plague the entire euro area. We did see that there were some sovereign debt concerns that were raised earlier this year, and it seems that in the interim the market's attention was diverted by other things, amongst them the currency wars, the prospect of additional quantitative easing in some developed countries. But now those sovereign debts have come back to the fore, and the euro is taking a bit of a hit as a result. And the rand seems to be tracking the euro lower as well.
It seems that Ireland's a bit reluctant to accept a bailout from the European Union at this stage, and it's also affecting debt levels, or rather yields, in other countries like Portugal. So it is much broader, as you say, than just Ireland.
Yeah, absolutely, Stephen. I mean, it's all the countries that share the euro in the euro area. So I think the whole idea of a single currency was meant to have lots of benefits for the countries that adopted it. And I think in the last 18 months, that theory's really been put to the test. So what affects one country is undoubtedly going to spread to a number of others.
And I presume the rand's not alone in tracking the euro, that other risky assets are also taking a knock at this stage.
Absolutely, Stephen. I mean, emerging market currencies in general, but particularly the rand, are viewed as risky assets. And so whenever you have these either sovereign debt concerns or uncertainty over global growth affecting global markets, then you see these sorts of assets and currencies also take a knock.
Well, just looking at some data we're expecting out later this morning. Retail sales, that's September's retail sales number. And we have seen retail sales tailing off from the levels that they hit in June and July. Would you expect a further decline in that number for September?
Yes, Stephen, our view is that retail sales are going to have moderated to 4.3% year-on-year in September, and that's a significant slowdown. If you look back to July's number, that was boosted by World Cup expenditure. Retail sales in that month were up 8% year-on-year, and market consensus for the following month was that retail sales would in fact accelerate to 8.5% in August, but they fell far short of market expectations, coming in just at 4.6%, and we think that they're due for a further moderation to 4.3% in September, and that's broadly in line with market consensus as well.
Of course, this is the last economic reading ahead of the Monetary Policy Committee's rates decision tomorrow afternoon. And do you think that the retail reading could have much influence on that decision?
I don't think that the one number, Stephen, is going to have a huge impact on the MPC's deliberations. But if you just look at all of the economic indicators that have come out since the Reserve Bank's last decision on the 9th of September, we've had a slowdown in manufacturing production. The PMI is still below the key 50 level, indicating an expansion. We're expecting a further moderation in retail sales. So all in all, there is evidence that the economy is still cooling. Inflation has undershot expectations for the last 2 months as well, and is expected to remain well contained over the medium term. So at this point, there's very little reason why the MPC wouldn't cut rates. So I don't think that the retail number is going to be of overwhelming importance, considering the wealth of data that seems to support a rate cut at this point.
And is Standard Bank still standing by its view that rates will be cut by 50 basis points tomorrow afternoon?
Yes, Stephen, that's our base case view.